Amanda Miller Talks, Top Queens YouTube page. Like, share, tag, and subscribe. Go ahead and come on in the room. Come on in the room. Come on in the room. Guys, we have special guests today that we are super excited about. We have Charlotte and Rico Finn. Guys, welcome them, welcome them, welcome them, welcome them. Today's conversation is going to be great. It's going to be very informative, a lot of information. And so, guys, we are going to allow a moment for people to come in the room. And as we do that, we'll have just a tad bit of conversation with them, letting them introduce themselves before we dive in because we want to make sure we get you guys time to come in. But go ahead, as you come on, go ahead and tag and share so you bring your friends in because we don't want y'all to miss this conversation. So guys, thank you guys for coming and welcome.
Thank you for having us.
Yeah, super excited. So it doesn't matter wherever you want to start. Just introduce yourself and kind of just tell what each of you do in the space of real estate and credit.
Sure, so I'll start first. Ladies first. So, Charlotte Finn have been a realtor for 5 years. Got into the industry because I realized we were, as African Americans and as Black Hispanic, so we were not represented very well in the industry as buyers and sellers. And so I wanted to make sure that we were able to just represent and give that education and that knowledge to as many people, and definitely I represent all people for certain, but wanted to make sure that we had proper representation because we had a very negative experience when we were looking for our home at tender ages of 23 and 25. So wanted to make sure that nobody else experienced what we went through. And that's how we got in the industry. And so as I journeyed into real estate and I got so many people interested, we realized that credit was home. They needed some help. And in came Rico the credit bureau.
Hi guys, Rico Finn. Yes, so just like she said, we got into this industry because we saw a space that we were, I wouldn't say excluded, but we weren't actively participating in. And she was getting clients when she first started. And then she had some people that was, yes, Charlotte, I want to buy a house, but I don't think my credit is up to par. And what happened was initially we were just reference them out to other people. Like, oh, go see this person, or we got this person. And then I was like, why not me? I mean, why not, let me learn the business, got the software, and then we just took off from there. And so now the partnership is kind of where it is right now. And we are continuously growing in this industry, but more importantly, we want to help our people, like Charlotte said. So we have some representation on both sides, in the credit as well as in real estate.
When I saw that you guys had the credit repair and real estate, I was like, that is super awesome. As a married couple, I was like, that is amazing, and I love the fact and the idea of how you guys feel like each other in that sense.
We work in tandem.
Yes.
So I'll get clients and those, inform me, hey, I may have some challenges, and what I'll do is I'll just pass them over to him. I'll stay out his business. I'll be like, I'll let him do his thing, and then likewise he lets me do mine. But pass them over to him, and he goes into takes a deep dive with the clients, figure out what they're needing, and then he'll give me updates. He'll check in, we have checkpoints, and he'll be like, okay, so this is where they are, or maybe they decided not to buy a home, maybe they have a different focus or a life situation, and maybe they just needed to get a car or get that credit card because something happened in life. But he will give me those updates, and so then I'll follow with the clients from there. But it's definitely great to have it in-house, because, I want to make sure that client comes back to me.
That's right. That's right.
And just like a lot of things that we think about in our marriage, we complement each other. And so this is just another way we complement each other. And it's worked out very well over the years. And we just continue to see us growing and growing beyond, just complement each other, but educating, our people, and all people, I should say, on this process. Cause we have sometimes where, oh, I think I need my credit fixed so I can get a house, and then I do my thing, and like, no, I think you're ready now. And so, so like she said, we kind of bounce to go back and forth, and, but yes, I stay out of her way, and then we come together, during the process, and, we stay with our clients throughout the journey, all the way up to the closing table, even after the closing table. So we just don't, just leave you out there in the space. We wanna make sure, again, that you satisfy with our service, but more importantly, well educated and creating this generational, education, as well as with the wealth that we're trying to create.
Absolutely. Now we had this for some of our closing questions, but because we're already there in the space of talking about how you guys balance each other, work in tandem, and even outside of those things, meaning the real estate and credit, you talked about you just work that way in that space anyways in your relationship. With that being stated, that question, well, I'll ask mine then so you can ask yours. So what advice would you give couples trying to buy a home together as it relates to having that credit conversation? Because I believe that when people are dating and people may have not so great credit, they're kind of ashamed. And how do you break that ice to have that conversation and say, hey, I might not be so good in that space?
And that's okay, I think honesty and being transparent is gonna be key. That's gonna be, you gotta start there with the relationship anyway. But you got to have that conversation because it may be that maybe your credit is not so good and maybe your partner's credit is excellent. You don't have to both be on the same line.
Yeah, and that's one of the.
Great.
Right.
One of you can get the home now and, go forth and conquer and all that, and then save the other person's credit for later. Let them work on building it up, establishing it, and that's now the credit you can use for that investment property or your vehicles or whatever else it is that you need to do. So I would definitely say have a honest and open conversation first.
Do that early on in your relationship. You can even get before you get to the marriage perspective. Like she said, just have that honest conversation because I think and then we give our own personal journey story, especially if we're dealing with couples or at least talking to someone who's currently single or maybe dating. We don't necessarily come out with that, but if we're talking about the lines of real estate and credit, you want to make sure that you have that conversation. For example, for us, I had filed bankruptcy before we purchased our first home, and we was in Virginia Beach, and sorry, I can't go on the loan, and they literally told us. We kind of knew that, but we still want them to tell me that.
That's right.
And then once that happened, all right, well, sorry, you got to get on it. But the key thing is, and even though you might not be on the same loan together, and this could be something we could talk about later on, but we can say it now, you can still be added to the deed. Closing table. So when we have married couples and hey, we just want to do this house in my name, we don't want to touch my credit, we just want to use her credit. Then when you get to that closing table, literally all you need is your ID. And that attorney takes a copy of your ID and you're on the deed right now. So if something does happen later on, which is, life will happen. And so that process and that transition is a lot easier when you're on that deed. So yeah, we don't necessarily that's what you want to do. Also, if you're going on it together, that can increase your buying power. But at the same time, you can still build off that. Like you said, if she has the credit and I don't, she gets that first, and then I work on mine, and then when the next house come around with investment property, like she said, I get that in my name. So now we have an investment property, and we also have a home we're living in, and we still haven't did nothing together yet.
That's right.
So that's the end goal. So.
And that other person who's not going on the loan, it doesn't mean that they cannot still assist financially.
Yes.
So you still can get a gift from that person.
Say it one more time.
Yeah.
Say it one more
The
time.
person who is not, they don't have their credit established, they can still assist financially. So you can give a gift, and so that's your way to support that transaction. So that is very still possible. And all they do is just check your bank statement, make sure that the money came from you specifically, but Yeah, I mean, it's a joint partnership.
Yes,
Can you get something toward the loan?
Mhm, mhm.
Okay.
And that's usually towards either down payment
The
or,
closing costs.
excuse me,
Mhm.
like you said, the closing costs, so.
Gotcha. What question we have, Noah?
So we have a question, from David Davenport. He said, how long have you two been married? And how long did it take for you both to get to this level of understanding each other and what each other brought to the table?
Good
Good
question.
question. So we've been married for 24 years
Yeah.
this
Oh,
year.
Well, this year we
This year, we
yeah.
turned September.
Yeah, September.
And, we married young.
Yeah.
We married real young, so
23,
we have grown up
25.
together.
Right.
But I would say maybe 10 years.
Well, when we kind of,
Kind of like got to the level of understanding for like how we balance each other out and.
yeah, I wouldn't say the 10 years. I think probably by the time we, probably say year 7. I mean, you know, you have year 7. I think by year 7.
Zero completion.
Because we were married, yeah. So we were married 7 years before we had our first child, who's actually, she graduated this year, she'll be 18. So, those first 7 years, we spent a lot of time doing that process of getting to know, feeding off each other.
Lots of togetherness.
We're both from the same hometown, so, and then there could be disadvantages as well, so it allowed us to kind of see each other's from another point of view, how her family sees her, how my family sees me, and so that kind of helped us along the way to make it to year 24 here, right now, so.
Awesome.
Somebody said, who had the better credit starting out in the relationship?
Oh, great question.
Well,
Oh,
I did.
she did,
I
yeah.
did.
Yeah,
And
she
it wasn't because I was trying to, or
Yeah.
what it was, or any of that, because I would tell you, just very uneducated in that arena, just all together. And it's crazy because my mom worked in the banking industry.
Okay.
So I'm like, you didn't tell me. But, you know, she showed me how to balance a checkbook and things like that. I knew to pay my bills, but I didn't like make those connections to understand like what it meant. So I would say I had it, but it was by default. It was not by, me being intentional. And then as life happened, I mean, we went through a lot. Like
Yeah.
he said, he filed bankruptcy. Then later on in our marriage, I had to file bankruptcy as well. So we both have gone through, the ups and downs, a roller coaster ride with credit. But we stuck with it. Like we never gave up. And when he went through what he went through, I was there to support him and encourage him. And it pained me to go through what I went through. We almost lost our house. But I filed bankruptcy and it saved the house, oddly enough. But went through all of that, and I think just realizing for me that I didn't even connect all the dots, even after the first time. It wasn't until he got in the credit industry, and I was like, and I'm grown. But that's when I was like, you know what, now I get it, now I understand, like, the whys, and he's helped me clean up my credit. You know, when he's posting sometimes, he's posting my credit clean up. He helped me, like, it's in-house, it's really for real, but I would say he really helped to open my eyes with a lot of the ins and outs of credits, because you think you know, but it's a lot that happens behind the scenes that we just, the normal person, the general consumer, you don't understand. So,
With that, just,
So on YouTube, we got, your cousins. Somebody said, super proud of you, Auntie Charlotte and Uncle Rico. Let's go. Bria. Miss P said, hey family, smash the like button on the way in. I did. And God continue to bless their union.
thank you all so much.
Oh wait, hold on. Oh yeah, blessings on
To
blessings.
kind of piggyback off of that person's question about, so based on your experience, Rico, and Charlotte, either one, male or female, do you see to have most of the challenge rate?
Wow.
Mostly
And
females.
Yeah, I would say,
Credit cards.
yeah, I would say mostly females, and not so much of the challenge is not so much of the scores, like the mix of credit. And like Charlotte said, we were taught like balancing checkbooks and et cetera. So we know how to make a budget, but we didn't know how to use that towards our credit. So I think that perspective, once we learned that, just getting educated, just learn it as much as you can. Like she said, behind the scenes, even to this day, this is year, 4 for me, and I'm still learning stuff like, oh man, I didn't realize that too, so, to help my clients, so getting the education part, and that's what I'm more about. Yeah, I want you to have the highest score you can possibly have, and, being able to get whatever line of credit or funding or whatever you need, but I need you to know this stuff, I need you to be educated, because if you have offsprings, you know, or siblings or other family members, you can take this back to them, so. That's what's really big for me, just being educated. So yeah, we get deletions, get negative stuff deleted off your report, and we get your score. That's why I always ask my clients, like, what's your goal? Like, why are you coming to me? What is your goal? And so a lot of times, a lot of people don't know what their goal is. Yeah, they might want to buy a house, but I'm just trying to clean up my credit. Okay, but to do what though?
Right.
You know, what's your aim
Just
for
to
this?
say you got good credit.
Yeah, but and that's another thing. A lot of people have good credit, but they're not using it. And that's one of the things that lenders want to see. They want to see you using the credit. They don't. You can have this, you can have that, but if you're not using it, you're just like somebody that don't have any line of credit at all. So they really pay attention on how you're using it. And that's one of the things I think you even sent us over was about the credit card usage, the DTI, the debt to income ratio. That is really what these lenders are looking at. They want to see how are you managing your credit and what are you using it for, and how are you using it. So, and that means more to them than so yeah, females typically have that thing. The guys, they really don't have about one or two cars. Like they're not doing they car, you know, the guys don't have their car, truck, or whatever, and that's it. That's all you'll see. But females, you know, you got the store cards, you got you know, all these new accounts right now from Amazon and all this online stuff, so you can get a plethora of things, and then Afterpay, stuff like that. And, so a lot of the things are like that. So, but mostly females. So, yeah.
And just to add to that, although he said like mostly females, also I would say probably mostly females are your clients too. Right?
Yeah.
So-
I would say about 80% of my clients are female, single females, if I must say.
So ladies have a tendency
Yes.
to want to figure out like how to clean their
To
credit
improve
up
it, right.
and to improve it and to set those goals to get whatever it is they're trying to achieve. And the guys, it's not that I won't say that they're not motivated, but it seems as if they are, I don't know if it's, I won't say it's shame or,
Yeah.
I don't know. You could
The
go
guys
into
would like,
what you
so I had a
said.
client reach out to me last week. He was a client of mine, and we did some work, and his credit is fine. I'm talking about he's well over 700, and he had an inquiry that came in, and that he hit. Man, I don't know what's going on. Something, man, thing dropped my score 10 points. I'm like, okay. You know, but you're still well over 70, but they more concerned about the little blemish. They want to be like perfect, right? Like all that. Like, no, you want to have something, you know. And so yeah.
So we have another, well, I guess comment. It says, it would be great for you two to hold financial seminars for the seniors graduating from high school, luncheons or etc. because this new generation really needs to learn.
That's
Yes,
that
yes.
is
That's
so
awesome.
true. And we were thinking about doing a nonprofit and just trying to figure out how we could give back in that space.
Yes.
So that is a great idea. And then with our daughter coming
Yeah,
up, she's
she's coming
in that
out.
arena as well. It would be so fitting. But
Yeah.
they're right. They don't have any clue. They just know that mommy and daddy, you know, hey, I need this, cash out me this.
Right.
Yeah, that's right.
And they just swiping.
Right.
Which, you know, we're blessed enough to be able to do that, and that's fine now. But when they go from that student account to now a regular adult account, and you swipe it in that card declining, you got these NSFPs and all of these things, and that's where it starts. But
Yeah.
they gotta form better habits
Yeah.
early on.
And we did a buy and seller seminar
Yeah.
about this time, about a year ago, at the Compass office in Buckhead,
Yeah,
well,
by the
around the
lender.
corner from it. Yeah.
Mhm.
And so with our lender as well, so we had so we are definitely coming soon. High school and college. Yes.
Put together as a. Okay, let's go through our questions.
She about to pull them out.
Bring them out, bring them out.
Right. Okay, let's see. No, I have a question that's not on here.
Sure.
So from a credit repair standpoint, are you one of the credit repair people that you gonna send me all these letters and I gotta do all this work on my end to get my credit repaired? Or do I just give you my information and you handle it from start to finish, and then you kind of direct me and educate me during the process?
Great question. I handle everything
That's what I'm
myself.
talking
So,
about.
yes, in this credit arena,
There we go.
yeah,
That's right.
yeah, this arena,
Hell no.
and so, what happened with this industry and a lot of changes that happened, and right now I'm still trying to make sure I'm compliant, with a lot of my stuff that I got going on. Yeah, there were guys and girls who got in this business and they got overwhelmed.
Okay.
Like they got too many people coming in.
Mhm.
And so they had to figure out, how do I handle all these clients? And it's just me.
They
so
got
this-
into it for the wrong reason.
Right, and got into it for the wrong
That's
reason.
right.
We gonna, and so, they started outsourcing, they started giving the information to others. And what happened was, you give that information to an outsourcer, they don't know Z personally. You know, they don't know, what you're going through, how you're going through it. They just send the letters off, and then you just sit back and wait. And then I don't know when that's coming back from the outsourcer. And then you hit me up 30 days later and say, Rico, what's going on? And I got to go and check it in. But what happened was,
We don't even know if they sent it.
right, and you don't know.
That's
And so I was gonna get to that. And
That's
so,
very
with me, with my client portal, that I have, you can see everything that I'm doing on behind the scenes, from what's in dispute, what has been deleted, what's
That's
negative,
trust.
what's positive,
That's
what's
right.
went from negative to positive. Cause I wanna build that trust, and it's a model that we came up with, when we started this. It's about the people, it's not about the paper. A lot of people are getting, like she said, people were getting in this industry for the paper. And what do you worry about you personally or this person? Some, they like half of my clients, really the majority of my clients, I've never seen them met before. Never seen them met before, other than maybe social media, because we kind of built that trust early on in the
Right.
process. But yeah, so I handle everything in house. Got it. So.
That's right.
And then he even has this little, my favorite tool, it's a
Yeah. So I do have a affiliate partner, Smart Credit,
Okay.
smartcredit.com, and I have my own personal link. And so that's where I pull the reports from all three credit bureaus, reports and scores. And then one of the features of that is a score emulator. And on that, you can actually go on and say you have a credit card and you say your balance is 800, you got a $1,000 credit limit with $800 balance. You can actually simulate what your score would be if you paid a certain amount on that card. And it will tell you how many points your score will go up if you make this payment. And so that gives you an idea of, oh man, I'm this close to reaching my goal, or then the score, the points that I need. And then also, you don't even have to call me for that, because that's built in, you have access to that. You can just play with that as much as you want as far as, when you're a client of mine out here. So yeah, it's just a part of the program, so. But most people say, no, I'm gonna let you do it, but then there is opportunity out there for you to not necessarily send the letters off and do the work yourself,
Right.
but more importantly, so you can stay informed. So you're not left out in the cold, or or I ghost you, or etc. So I think I had more clients that ghost me. They're like, hey, you need
What
to be with me.
happened?
What happened?
Right,
Yeah, you paying, but I send you an update, they heard from me. So, and I do updates, and Julie, that process, about every 40, I would say every 40 to 45 days, that I send those updates to you, and then we want to talk and have another conversation, we can do that, or I just move on to the next stage. So,
Anything out there, my love, before we?
The Amanda Griffith song.
Yeah, we won't be able to go without that, but not today.
The show is so good, Miss Miller.
Thank
You are
you.
really helping people with this show. Keep going.
All right. We appreciate it.
All right.
Yeah.
Is that for the man in California?
Mm-mm. All right, so we got a question. Please explain the reason your credit drops if you use over a certain amount of credit. It doesn't make much sense to me.
Oh, well, that goes directly to your credit utilization. And that's about 30% of your score, 35%, depending on what score model. Because there's several scoring models, from a FICO score to a Vantage score. There's FICO score 1 through 5, there's Vantage score 1 through 9. So when you are using that card and you're swiping, and again, you have your due date, you have your statement date. So you wanna make sure if you use that card or whatever amount you use it for, go ahead and pay that. You know, don't take that minimum payment, cause if you make that minimum payment, let's say if your minimum payment is $25 a month, but you purchase something for over $100, and then you still got that money, you just paying your regular payment, the score is gonna drop because that balance is still being carried over. And so that makes your utilization drop. So you'll go from having, let's say, we try to keep you at, everybody wants to say 5% or below as far as your credit card utilization, simply meaning what your balance is versus what your limit is. And so you gotta try to keep that as close as possible to zero. So when you use that account, if you're not paying that amount that you swipe for, that score will dip on you. So that's a possibility. Unless you got other cards that you are kind of paying on and you kind of balance itself out. But yeah, if you get out one card and you swipe that card and then you don't pay that before the due date or before that next statement date, that score is gonna hit. It's gonna take them to a dip, so.
I have a question. So when do your credit normally report, like what day of the month?
Great question. So a lot of lenders from Capital, so let's say credit cards from Capital One, Wells Fargo cards, and Navy Federal, they generally report like the 23rd to like the 28th. And so that depends on your lender, whichever bank or card you got when they report it. And so that can vary. So there's not really a set date. Now you can always call and ask your credit card issuer, hey, what day y'all report? They gonna give you a time frame between the day or two, their window. Thank you. They're not gonna really say it what day it is. They don't want to be held to that, but it's in the window. So it's usually at the end of the month. So yeah, you can make some purchases, but hey, before that gets reported, just go ahead and make that payment. Because again, like you said, like I said earlier, that utilization, that's gonna be the main thing that's gonna pop up what they're looking for.
So I have a question.
Sure.
So my next question is, so they have all these different apps and stuff out here, right?
Mhm.
Kick and
Yeah.
you can get the Chime Credit
Yeah.
Builder. Like, would you suggest that those things or?
Good question. Yeah, I would suggest them because you want to know what's going on with yourself.
That's right.
You know, and they have the calculations in your account, so yeah, you want to have them. But what I would suggest is something like Smart Credit, which my affiliate, because number one, most of those apps, they are not reporting from all three credit bureaus.
Okay.
Most of them have at least a partnership with, a lot of them have a partnership with Experian. If you notice, Experian has been advertised a lot because they're a little bit more liberal and open up to these other issuers, and their fees are not as high with their partnership. So that's the one drawback I would say. A lot of people say, well, it's not always accurate. Yeah, pretty much, I would say between, what's that word we used back in high school, standard deviation, where you write it, do something up in there. That's usually kind of accurate, maybe 20, no more than 30 points off, but the only downside about those is that they don't report to all three credit bureaus. Right.
And that's what a lot of people get mixed up with. So when they come to us and they're like, oh, my score is a 620, you know, they didn't buy a home or whatever. And then we're like, I'm like, well, what were you using? And they're like, well, Credit Karma or whatever. But again, that's just one bureau. It's not all three of them. In the lender, when they pull your credit, they're pulling all three. And then they're using the different FICO numbers, one of the numbers
Yeah, one
that
side,
he
yeah.
mentioned. And they don't all use the same number.
Right.
Everybody has their own, I call it a
Scoring
magic scoring
Yeah.
system, a magic formula.
Oh,
Is what I feel like it is.
Yeah.
But it's
Right.
typically like 20 to 30 points different than what you're seeing on those type of apps. So,
So yeah, they are good to have because they're
Yeah.
knowledge based and you want to be staying informed. And a lot of times it's real time with some of them, but to get the big picture, you want something that's getting all three scores and reports and giving you more benefit. You know, even because most of those apps are free, and we're knocking that. But yeah, you want to have something, but
and
that's the
then
only drawback.
definitely pull your report at least once a year. So you can, maybe it's first of the year, that's your New
I
Year's
say
resolution,
three
you wanna,
times a year.
or what, hey, you done read it here.
Three times. Yeah.
Stay in the know.
Yeah, and you don't have to wait till you get ready to. A lot of us, we wait till you get to make a purchase. Let me check and make check that periodically. I say a couple times a year, so you can stay. Because again, stuff that can be added to your report, you have no idea about. Even if you get these alerts from your apps, until you do a full report, I do credit audits for all of my clients, and I do those audits before I even know if I'm gonna be able to help you or not. Because like I said earlier, it's about the people, it ain't about the paper. So I need to know, number one, if I can help you, And then number two, it'll tell me how long the process will take to reach whatever goal is set.
Okay.
So I perform credit audits, and that audit is a lot simpler to read than your standard credit report, because that could be sometimes difficult to
Yes,
solve.
it can be
So
overwhelming.
it can be
It can
well
be.
overwhelming. So my audits are definitely something that you wanna grab on.
Charlotte, you mentioned, people will say, I have a 620, I'm ready to buy a home. With that being stated, what is, the minimum credit score that lenders, look for?
So it does depend on the loan type. So if it's a VA loan, that's actually
veterans.
580 for veterans. So they have a lot of grace that they give, even as it relates to.
I know you like,
Yeah, we know the personal
Tap in,
experience.
bitch.
Yes, tap in.
trap in dance.
Yes, even as it relates to like the collections activity, they're very gracious with our veterans. So
Okay.
that's only 580, but for the other ones, the FHA conventional loans, generally you're looking at 620. Now a lot of people ask about down payment assistance, and it used to be you need like a 640, which was super odd to me. It's like, how are you asking this
That's
person
crazy
who
to me.
need help with financially with getting a home? You're expecting them to have a higher credit score than you would someone else who doesn't need the help. I always thought that was a little weird.
Yeah, they
But
got those people.
now you can get that down payment assistance with also a 620.
Yeah.
Oh, wow.
Mm-hmm.
And that's you say FHA, that's first.
For FHA, the Federal Housing Administration.
Okay.
Yes.
So basically your first time.
Okay.
Yeah, it's first time home buyers, and they're more gracious as it
Yeah.
relates to what you can have on your credit, and your debt to ratio income. That's also a lot of grace given for that as well with that particular loan type. But the down payment is a little bit higher for that one versus the conventional one. Conventional, you only need 3% for your down payment. FHA, you would need 3.5%.
And that's of the total price, you know?
Yes, that's on the total sales price of the home. But for veterans, they don't need
wow.
any down payment.
Hey.
They only need to come to the
They-
store with their closing costs.
Yeah, and
That's
there's
it.
a
That's
difference,
it.
yeah.
Yeah.
Okay, so we got David again. He has two questions. The first question is, why does your score drop when someone checks your credit?
Yeah, so, great, so you have inquiry, so you have a soft and hard.
Okay, that was the next question.
So, thank you, so, put it like this, and I learned this early on, and I'm sure it's still still true today. Anytime someone asks you for your 9 digits of your social security number, it's gonna be a hard inquiry. Most soft inquiries only occur when they ask for the last 4 digits. And I also do home security as well, APT. So, like I have a credit for a client, and they go through what she goes through, we get the home, and then when they're ready to get the security system, I only need their last 4, because it's a soft inquiry. So except when you're checking it yourself, they don't consider that a hard inquiry. So, it's just another, that really, I never could find the answer why we need 2 different inquiries. I mean, because most people, when you're applying, you're trying to get some credit, and
Right.
then and then I'm getting hurt for trying to get credit, and my score does drop. So, depending on how hard they hitting, it can cause that score to drop. So, and just don't. And so also inquiries, hard inquiries, they only look at the last 2 years. So if you got something that's over 2 years old, like inquiry or hard inquiry, they're not going to hold that against you when it comes to a lot of the lending. So it's just the hard inquiries that drop the score.
Baby, tell them about why they should not go to the car dealership and let them run
Yeah.
their credit.
Yeah, and so that's what a lot of people get in trouble with when they're trying to purchase like a buy here, pay here place. When those car dealerships, they have their in-house lender, but when they get your information, we're gonna just run it. They are running it through at least 10 banks, and what they're doing, they're trying to get the cheapest rate for you, and then they come back, all right, we got this rate for you, but they didn't hit you about 10 times to get that rate, so they're gonna run it through, and so stay out of it. So if you do wanna go to a used car dealership, just go to one. Don't, because if you go into multiple ones, in a day, you can probably get 30 hard inquiries if you go to 3 different dealerships. So yes.
Or the better thing to do is just go through your bank, go through
You
your
get
credit
it, yeah.
union or your
They
bank that
already
you're
use the
using.
information.
They have
Yeah,
the
and that'll be-
They're gonna run it out one time, and then you can take that pre-approval letter and then go
Yeah,
get
to
your card.
approve, right, to the.
So you don't have like 10 hard inquiries.
Yeah,
And that's gonna really bring your score down. So a lot of people always reach out to him like, I just want to get a card, now my score is in the toilet. And he's like, did you do what I tell you to do?
yeah.
Right.
And that's a part of the process, with the credit repair. I tell everybody, I can't, I recommend, cause life happens, things do happen, but if I'm getting deletions off your report, or I should say, we're getting deletions off your report, and then you're going back applying for things,
Right.
we're hustling backwards, that's what I'm
That's
saying,
right.
so
And
let's just hold off
That's
and
right.
just wait till I say, alright, go,
Right.
and then that increases your chances of getting approved, cause that's what you want anyway, you don't want to get denied.
That's right. And now, Charlotte, I have a question for you. With this crazy housing market, we ever gonna see a break? Or are those days just completely over with?
So there are current rates. So very good question. Right now, if you were to go to purchase a home, my suggestion would be to go to new construction. And they are offering buy downs on rates. You can get, and I won't give them a plug unless they're gonna use me.
That's right.
But some of these builders are
Yeah,
offering 3.99, 4.99% interest rates, 5%, which is lower than what you would get if you're just going to do like resale. So there are a lot of different programs that are being offered where you can get in the home. It is a really good interest rate and you're not feeling that pinch because that interest rate is going to impact your mortgage payment.
That's right.
And that's why a lot of people are kind of on the fence because they're like, well, first of all, why am I going to pay more for something I could have got, 2-3 years ago? But then also that mortgage payment, like that's a lot of money. But when you're looking at it holistically, the whole objective of home ownership is for you to build a legacy and that generational wealth. 9 times out of 10, you're going to pay for your mortgage the same amount that you're paying for your rent. Even if it's 100 or 200 more, guess what? At the end of the day, when you look back 2-3 years, because people don't keep moving to Atlanta. So the price on the houses are not going to go down. They're going to continue to increase.
Especially in the metropolitan
Yeah,
area.
Correct.
Okay.
So then when you look at it holistically, you're gonna have all that equity. You can pull that equity out, you can pull the equity out and use that money for a down payment and go get another house, or maybe you want to sell the house altogether and you wanna just sell it and then just move on to something else, but we like to tell people to keep the house. Pull some of the money out, let it sit in your account for,
Make it work
a
for you.
couple of months, and then use that to buy something else. Then you got that first house as an investment property,
That's right.
Yeah.
and then you're building that wealth.
Okay.
So that's what it's about. It's about building the wealth.
I'm glad you said that. That helped me because I've been battling. Should I move? Should I not? What should I do? And I've been here forever, but that helped definitely.
And-
Just stay where you are. Maybe do some things that you would
That
like
you want to do to the
Yeah,
home.
yeah.
It just breaks my heart when I go back and I look at the houses and I'm like, okay, now 3 years ago,
Yeah.
this $400,000 house was not $400,000.
Yes.
And I don't feel like I'm getting $400,000 worth of houses.
But you gotta think about it. You got all these people that moved to Georgia, right? Now, think about it like this. We make, let's say, you're a teacher, you make about 50,000-60,000 a year. But if you live in New York, you making like 80,000-90,000 a year. So you come down here to Atlanta and you offering cash. You can pay straight out for your house. That's why the price is gonna keep going up.
Right, and so
And
we
that
have,
happened.
have
We
three-
had several clients
yeah.
to come from New York
No,
and
she's never,
California too.
no, we got one client, she's never been here in Georgia, and she's got
Oh,
3
yeah,
properties.
yeah.
She in New York,
Yeah.
so that
But she
happened a lot with
sees the
housing.
value.
She saw the value a couple years ago, and she just came in and got a couple of properties. But like how you saying, yeah, that makes the market go up. And then there's not a lot of buyers as well.
Please get out of it.
I need y'all to go home.
Yeah,
We fool.
But not like, cause we complain about $1,200 for rent.
yeah.
But on a 1-bedroom apartment, they paying for 1 bedroom $3,000-4,000.
Yeah.
And
Right.
And
it's
it's in
about
the hood.
400
Right.
square feet.
With the heater in the floor.
Right. It's definitely a big difference.
Anything before we go to the next question?
Jeff is here. He said hello,
Hey, Jeff.
and Amanda and family. All right, Jeff, be good today, Jeff. We up here today.
We got
Yeah.
company.
We up here today,
We
Jim.
are.
I do have a question though. So like for people who have challenge credit and they want to move into home ownership, would you recommend like what those programs where you can rent to own?
Great question. So we, you
Yes,
go ahead.
no, you talk about it, it's not
Oh, I'm gonna give you,
mine.
yeah, so, a lot of times when that happens, so we have a lot of people that come that can afford home ownership. In other words, they can afford to make the monthly payment. But their credit situation has not, but they don't have money saved up for the down payment, closing out. That's what I would say we probably run into more than anything. So, and then we have some people on the other side, we got this credit and got the, got the money but don't have the credit. So when that, I ain't gonna say their names, but there's a couple of companies that offer this. For some people, depending on your situation, like I look at, it sounds like to me you probably should go with this lease to own offer because I don't know how much you're gonna be committed to living here in Atlanta Metro, number one, and then number two, if you're gonna maintain building your credit through the process, so when it's time for you to go ahead at the end of this lease or whatever you sign up for, that you're gonna be ready to be a homeowner. And so that can get a little tricky. I think we've tried a couple of times and anyone is.
So the thing with the programs is that it's set up, like he was saying, for you to be able to save that money that you need for your down payment. If that's what you're going to, if that is your gap or your reason, then I'm here to meet you wherever you are. However, it's still renting. So when you're renting, every single year that rent is going to increase. And that is what worries me a little bit. Some people are like, yeah, I want the house, and get into it. But you ultimately can't afford to keep having that rent to increase. And I want people to be comfortable with where they are. So it's worked great for one of my clients, and she's doing well. She's still in the house. 3, 4, 5 years later, it's a beautiful home. It's working great for her. She's not even looking to move anytime soon. But then another client of ours, they already had challenges prior to getting into that situation, and now the rent is increasing, and you can't pay the rent.
Yes. So it can be very tricky.
And I've heard some stories around the lease purchase where you still have to put a certain amount down.
Oh yeah,
Right,
you do.
even before you,
Oh,
right,
yeah.
like a
It's the
regular
same.
home.
Yeah, it's the
Right.
same process.
But then
Not
you
as
have
much,
to
but
entrust whoever you're leasing from, that company, to take those funds, because they're supposed to take a portion of it and put it to the side.
Right.
So that
Right.
when, so for your down payment when you're
Right.
ready to purchase.
Correct.
Yes.
Now, these companies come in and go out so
Then-
quick, and then where's your
Where your money?
Right.
It's like, who are you really putting your trust in?
That's true.
Oh, she's shaking
So a
her
lot
head
of
like,
what's in
No,
the,
not y'all, not y'all.
no, it's good. So a lot of people are in that realm right there. I love the program because again it was a lot of credit my clients' credit wasn't just right, but they could get into this and they got all this other stuff but I don't try to talk them into it, I just pass them on the shore,
Right.
but they didn't want to do it because a lot of times, like you said, it's that down payment, it's that money, it's that rate increase that could happen. And then, to me, if you that close, then just keep working on it, and then just get your own thing,
And
If
have a
you're
little
there.
bit of discipline and just save
That's
up
the
that
key.
money on your
That's
own.
right.
Yeah.
And then you can go out there and just buy, holistically without that program. So
It's funny, you guys have answered the bulk of our questions, and we haven't even had to ask.
It's
Yeah,
all
you
good,
got
yeah.
points flowing.
Yeah.
So I've heard people say, well, if you have debt and the debt collectors are calling, don't pay. However, are there things that should be paid off, that would help in that space of getting a mortgage?
I'll get the first part. It's your debt. And so we pay it. Now, if the debt is in collection, so in other words, you had, I'm gonna date myself, you had I'm gonna say Macy's, I'm gonna just use Macy's for a second. I was gonna say Sears. Right, so you had a
I used
Macy's
to work
card.
at Sears.
Yeah, me too. Yeah. said it. And so, that card, it ended up going to collection, you couldn't pay it, you lost it, whatever, something happened. And so Macy is either gonna sell that debt to a debt collector so they can collect, so they can get a little something from it. Or the debt collection company go from it and pay it. And then what happens a lot of times, it still gets reported on the report now. It's not gonna show up as Macy's anymore, it's gonna show up as ABC Collection. And it's, and it has to do about how it's actually reporting on your report. That's when they do a credit audit, so you can really see what that is. But if they're calling you, you know, this is the attempt to collect the debt.
Right.
That's what it is. They're trying to collect the debt. Now, some of those cases, some of those people have gotten paid already, because like I said, Macy's done paid them.
Hold on.
You got to, yes.
Go ahead, so they can just ask them to hold while we
105.7 The Phase, can you please hold?
go ahead with it.
And so I'm never gonna tell you not to pay the debt.
Okay.
Now, I'm gonna tell you, don't pay that collection.
Okay.
And that's just me, and again, this is, you know, I'm not an attorney, this is for informational purposes only.
That's right.
No, but we always say, just because you
That's
never
it.
said it, don't
Yeah.
make it right.
Don't make it right. But it's how it's being reported on your credit report, because at the end of the day, they gotta prove to the credit bureaus when you challenge that belongs to me.
Okay.
And so, if y'all can't prove that debt belongs to me, then
It ain't mine.
it's not
So
mine.
what
It
you-
ain't mine.
Now, there are situations, and to come closer, like, we go through the whole process, we've attempted to get it deleted off your report, we couldn't get that deleted off your report, that collection, they just stingy. They ain't gonna give it up, they gonna hold on to it. Then they have something we call pay per delete, which means we will go to that collection company and say, hey, ABC Collections, I know my balance with y'all is $1,000 from my old Macy's account, but listen, I'm gonna get, how about we come up with an agreement, I give y'all 5, but if I'm gonna pay y'all this 5, I need y'all to write a letter, and I need it in writing saying that y'all will delete this off my credit report if I pay for this.
Okay.
Right, because a lot of times, we'll pay a collection company, and a lot of people pay, and with no agreement, and you check your report, and it's still on. Cause you ain't asked me to take it off, and so, they're not gonna, they gotta spend money to take that off themselves, they gotta notify the credit bureau, they gotta do this, they gotta do that. So, you wanna get that in writing, so, now, but that's only for me at the end of the process, after we've tried to get it
Everything
verified and validated, and that's what I'm all about with my services, credit restoration, is about getting your debt validated or verified. And we need that to happen. And so we get to that point, and if that collection is stopping you from getting the approval, that's when we go to that. That's when we do the pay per delete. Other than that, don't answer the phone. You can answer the phone. Don't send no money. Now, you know, then there are other instances where you get summons by the court, and if something like that happens, you need to answer that. So then they want that, but that opens the door up to getting, that opens the door up to getting that pay per delete, that communication.
Oh, okay.
But only if that's, to me, if that's stopping you from getting that approval, that home approval.
And so
Hold
medical,
on, let's see what question we got for
Who do
you.
we have calling?
You have Jeff from California.
Oh,
So,
Jeff, what we got today?
Well, I'm kind of looking at you guys online a little bit, but the question I think, as you guys know, we had a lot of big fires that were destroyed the whole city out here in Cali. And the market in that city, I mean, has went down dramatically. So a lot of people want to rebuild, but there's those that want to move on and buy something else. What do you say to those that want to do that?
well, the first thing that I would say would be to follow up with your mortgage company to see what they're offering in terms of maybe they're offering some sort of forgiveness. Sometimes they'll have programs that they may not advertise. So I would definitely start there with having that conversation so you can see what's available to you. And then go from there. But also, of course, in partnership with your insurance company, because they may be, offering to give you, the money to pay off that particular loan, and then in which case you can then turn around and get another home loan.
Right. Well, okay, so that was a question that we were going back and forth with around conversations out here that, where these people are going to go, and where it's been talked about they wanted to get away from it, even though they're right there by the ocean. I don't know how they didn't put it on fire, but you got the water right there. It was just, and when you drive up through there, it's just mind blowing that even out here, California is like the fifth largest economy in the world. And so when you're out here, it's like you pay to live here, but when you get something destroyed like that, it's not easy to find what you're accustomed to or what you've been used to. Almost take blood. You're supposed to have your house paid off. You can't get that back. So what do you say to them that that the insurance companies, a lot of them have bailed out here. They bailed out on them. I feel really bad for them. They just went belly up because of the devastation of the fire. So, what do you say to those that are in that situation trying to just rebound and regroup?
My heart definitely goes out to everyone experiencing that. Definitely challenging times, but I would reach out to the insurance commissioner. A lot of times we don't realize it, but insurance is governed by a public service. I know that's how it is here in Georgia. I'm not sure about California, but we have people in place that we have elected to advocate for us as consumers. So I would definitely make that reach if you all have something like that in place in California.
Okay, I just wanted to make sure you guys know I didn't have serious questions other than I'm looking at my fine, beautiful wife up there.
Thank you, Jeff.
All right, Jeff, thank you for calling.
Thank you. Great question. We
Bye.
appreciate you.
Mello, leave me alone.
I told you to behave today, Jeff.
Hey,
We got company, we okay, we Hollywood.
All right, have a great one. Bye-bye.
Bye. Thank you.
So what you got?
I'm gonna head on Jeff Paul.
That was so kind.
That beautiful day.
I'm plugging that in, yeah.
Right.
Let me tell you something, Rico, every week.
Every week. you
Every
got it.
my word.
Yeah.
Yes, he does. So I have a question that says, what are lenders actually looking for when they pull your credit?
So
When you're
they-
purchasing a home.
So when you're purchasing a home, they want to make sure that those collections, if you do have those collections, they're looking to make sure it's like not too many of them and it's not too much, because of course it will affect your debt to ratio income, but also they're looking to make sure that they're not too soon. So the time frame to reset, yeah. So they're looking at that. So I'll make sure first that debt to ratio income is on point.
Okay.
Make sure that credit score is on point. So you've already called Rico the Credit Hero.
That's
You've
right.
already ran your audit.
That's right.
And then for medical collections, that's not as big of a deal anymore for the medical collections. And I know a lot of people were so fearful about those, but a lot of times you can just do a dispute on those and get those pretty much removed. But yeah, that's not gonna withhold you from getting a home if it's the medical collection.
What about the student loan?
No, that was about it.
We all got them, and they all got
Right,
them. But it doesn't impact you as much as it did, what was that, 2 years ago?
Yeah,
When
about
they
2
had
years ago.
Yeah.
And it affects your debt to income ratio, because even if you are in repayment and your repayment is zero, eventually they know that's gonna change, so, a couple
But-
years ago, that was.
But even if it is zero, as long as that servicer has written a letter, or you got that letter to say,
Okay.
hey, it's in deferred for this amount of time, then it won't impact your mortgage at all.
Oh, really?
Yeah.
So, you can get locked in for a certain amount of time, if you're paying, no matter what the amount is that you're paying, and it's locked in for a certain period of time, that's how they're looking at it when they're adding it into your debt to ratio income. So it's become less and less impactful, because we know that it was preventing so many people from getting a home.
Yes.
And we were in the same boat, before we purchased our current home. We had to wait until they updated that law, and we was on go, we was like, all right, boom, let's get it. But it was impactful, but now the laws and the rules and rates have modified, and so it's very, 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 so I would say less impactful.
Yes, and so you can actually have collections on your report instead of your approved. And this is coming, not from me, it's coming from a lender. Our lender particularly, I prefer a lender. Auntie Kelly, Kelly Dover.
Give her a
Yeah.
shout
Yeah,
out.
that's
That's
it.
right.
And,
Cross Country Mortgage.
Cross Country,
is-
yeah.
Okay, Auntie
Yeah,
Kelly.
Kelly.
What,
And-
who is it again?
Kelly
Kelly
Dover.
Dover with Cross Country Mortgage, she's a gem.
And we had this at our buyers seller seminar last year, and she mentioned it. Like I said, it wasn't my words, and she literally said for her, if it's your collections are under $2,000 total, they're not going to even count.
Oh, wow.
So if you have collections,
You still got them.
Kelly can get you approved. Right. We ain't got to just see if we can get you there. But again, a lot of people will say, well, man, I got some stuff to clean up on my credit. Not what I see right here. That's why it's important to let the experts, and I'm
Do the
pointing to
work,
Charlotte
yeah.
and Kelly, let them tell you whether or not you get
Right.
approved and how it's approved. Now stop thinking you know.
That's right.
Yeah, you probably know, you do know what's on your credit, that's good, but will it stop you from getting approved?
What is the hardest thing you guys have seen to get out the prison?
Ooh.
Is it the bankruptcy? Is it the?
Yeah, so bankruptcies are challenging. Bankruptcies are challenging because it's how it's put on it. In other words, I have clients that file Chapter 7, and you know you can put just about everything, all your stuff on there. But you'll have a bankruptcy on your credit report, and then some of the items that were included in the bankruptcy are still reported on your credit report.
Yeah,
Mhm.
like
And so-
hit hard two ways.
Right, and so
Wow.
you gotta, and also it's the verification process for the bankruptcy takes a little bit longer because you gotta, hey, how did it get here? And the credit bureau is gonna tell you, we didn't put it on there, and then the creditor is gonna tell you, we didn't do it, and the courthouse definitely can't do it because it's against the law for them to do it, so that is one of the most challenging things. And maybe child support a little bit, but that's become a lot better now because of some of the things that have changed in that.
People don't realize that child support will go on
Oh,
your
it will
credit.
pop
See, I didn't know that.
Yes.
Oh, God.
I don't see it that often, guys, so, and kudos to a lot of guys, I don't see it, if y'all paying child support, I don't see it, I may have
Okay.
seen it about once or twice over these years, but it's hard.
And that can, I won't say prevent you from getting a
Yeah, the
home,
lender might.
but, you know, you have to include that in the debt to ratio income too. And that
That's right.
and that should
Yes.
be behind,
Yeah.
right?
Gotcha.
So, fathers, please pay your child support.
Yeah.
They're taking more than your ID
Please,
and your
don't get
license,
that on there.
okay?
Yeah.
Right.
What
The last
questions
thing
we
you
got?
want.
What
Alright, so
questions?
we got,
Before we close.
you have so much scamming going on, how can you determine if you're paying the right collector, or is it someone that got a list of people that owe money?
No, great question. You need to get, so when they call you, you need to get it in right. You need to send me something in the mail. Send me something concrete. And now, a lot of times, that can be tricky because, let's say you move and that collection company is trying to catch up with you, so they can probably add it back onto your credit report. So you want to definitely validate that and ask them if the collection company called, who was the original creditor?
Okay.
I need to know, you know, if it was Verizon or was it Sears, like who was it?
You
So-
like Sears, don't you?
Well, yeah, I'm just using that.
You like working there.
Yeah, it was, but yeah, it was one of the best jobs I had. But,
That's because that's where he met.
we kind of met.
That's
So it started
Okay, that's why he over there
Yeah,
at
that's
Sears.
And so yeah, you gotta figure out where it comes from. Telephone conversations, even stuff in the mail can be scamming, phishing. Just call and validate, verify.
What about, and I don't know if this is an option, could they get their credit report full and then use
Oh, it's on the
the
report.
number on there to, or the, you know?
Well, yeah,
that's
so
kinda
there
like
are some
reverse.
ways, yeah, so if you wanna really find out, but at that point, we already be on them anyway, so yeah, that's a good question. It is a lot of stuff.
Just call Rico the credit
And
hero.
he,
Well,
right,
yeah.
he'll do that work for you.
That's right.
What was the next question?
Absolutely.
It was more so of a comment. They
Okay.
said nowadays they asking for bank information over the phone. They have the correct bill, but I don't trust that they are who they say they are, so I just hang up.
So send them a link, tell them to email you a link, just like you email, invoices now, yeah, tell them to send you an invoice through the email. And don't give them your real email either, get your secondary email, so you got your real, tell them to email you the link, and then you can pay through that link. That secure pay through it, and then, you know, that encrypted and all that stuff there, so you can
Give
get
you
it
the
too.
opportunity to verify.
Right, and use, if you can, use a credit card to pay it. That way you're
Oh,
protected
wow,
as
you
well.
dispute, that's
Right,
right.
you dispute that with your car
Mhm.
company, so,
That's good.
I got one more question and then we gonna get on out of here.
okay,
My question is, can you buy a house with bad credit?
yes.
Thank you.
But what's that bad
But what's
credit?
bad credit?
Right,
What it is?
right, but what's bad credit? You can't
Because
with
he
no,
said 620.
no 200
620.
credit, that's how it is.
Yeah.
If you're a
If
veteran,
you're a veteran, it's
veteran.
580, yeah. But yeah, we've had literally people that was literally right at 620, and it got approved, you know.
And so I would say the key is to don't talk yourself out of it. Rico's had several people come to him thinking their credit is terrible, it's jacked up, I can't get nothing. And he runs it, and he's like,
680.
you're like, oh, you ready. And so then we run it through our lender, and then we're like, you're approved. They're like, what? Like, literally, I have people now that are approved. They didn't even know they could get the
Yeah.
house.
No,
Wow.
And so they don't have all the
And
money
they moved it,
now.
yeah.
But I'm like, hey, I told you, we moved fast. Like, we got the approval like within 24 hours, and here they were thinking they could not even own a home.
Oh, wow, that's a
Yes,
beautiful
yeah.
thing.
And so like she said, don't do it yourself. Let the lender tell you. And one thing about at least our lender, hey, Rico, take care of this, do that, and they'll be ready.
Oh,
she's
wow.
And
very
so just to
detailed.
share our personal experience, so we were not denied when we went to get our second home, but we were trying to get a home for a certain dollar amount. We wanted a certain budget. And so that's what Auntie Kelly, she came in, the third, oh, I'm sorry, yes, the third one.
Yeah.
So she came in and she was like, well, no, this is what you need to do. You need to pay this, you need to pay that
Mhm.
to get the debt to ratio where we wanted it, so we could afford to get the home that we wanted.
I got
So there's also value in having that lender to go ahead, you to do the application, let the lender tell you what you're needing to pay down to
Mhm.
get the amount of home that you want.
Yes,
Mhm.
yes.
Perfect,
Yeah.
love it.
Alright, so Rico, in closing, what would be your closing remark in reference to, managing your credit, the do's, the don'ts, before they have to come to Rico to
Yeah,
zero?
yeah. So one of the things I would say is, especially if you have, your bank, your checking account set up with a bank, go ahead and utilize their tools. A lot of those, from Chase to Wells Fargo, they have within the app, they have it, credit wise and other stuff like that, that you can check your reports. And then don't ignore anything. Don't ignore it. If something gets sick, especially something comes in the mail, don't ignore it. Take a look at it, research it, and see, because it could be something. A lot of times, I don't know what that is. Well, let me tell you. And see, for me, I can go back to the date that you open it and the last time it got reported. Oh yeah, I remember. So don't ignore the things. Some of the do's is, of course, check your reports. At least try to get that in about 3 times a year. Some of the don'ts, don't be late on any credit card. So I'm gonna say it like this. Let's be real. You can be late on your light bill. Don't be late on your credit card. Because that's the right. I mean, yeah, you might get an extension.
You need your light.
You need your light. I ain't saying don't pay it, but try not to be late, because late payments are the thing that drowns, that pulls your score down more than anything, any collection company. Late payment, and that's probably is one of the, it's a twofold. It's some of the easiest thing to get off, depending on what bank it is. It could be some of the hardest things to get off. So pay the bills on time, and safe.
Yes. My closing remark will be mind over matter. So don't think that you cannot be a homeowner. It is possible. We have seen many clients that did not think they could own a home. So definitely, it's fear. Don't allow that fear to overcome you. Step outside of whatever your circumstances were with your life situations. It's generational curses that we're literally breaking. And you may be the first one, but you can do it. And don't listen to what other people's experiences were, because that's not your experience. That's not your journey. Walk into your truth and you walk into the light, and go get that home and call me.
Look, all they can say is no. That's the worst thing that
Correct.
happens.
And we say it's not a denial.
No.
It may be that you're delayed.
Just delay.
But,
We can get you.
Yeah, so not right now.
That's
Not at the
right,
moment.
not never, it's just not right now.
That's right, this has been awesome, very informative. Any, questions now before we close? I wanna make sure everybody is able to be heard and get their things answered.
Nope. All hearts and minds are clear.
This is good, so you guys know that if you need your credit repaired, you guys definitely make sure that you reach out to Rico Finn, the credit hero.
Yes.
And then Rico is gonna get you ready for that dream home and shift you right on over to wifey. To Miss Charlotte Finn and guys. Charlotte, what's your, what do you work for? What, you're with the
So I'm with, Colwell Baker.
Okay. Okay.
Yes, yep.
So y'all reach out, you can find Charlotte and Rico both.
Instagram, Facebook.
Yes.
All the
Yes.
platforms.
Yes.
Mhm.
Right. Yes.
We're
Yes.
both with
Yeah.
y'all. And then, yeah, definitely do that. Guys, thank y'all for coming.
Thank you for
Thank
having
for
us.
having us. Thank you.